Good evening and welcome to the Trading the Tech Show. My name is Derek and this is iLi Academy. Today is Monday, April 5th, 2021. And today so far was a good day in the market. Good day for the accounts. We're gaining some equity back after the drubbing that we've gotten over the last couple of weeks. Now we're starting to gain some of that equity back. So hopefully this trajectory that we're on will continue because it would help us a lot here. So a little stressed, a little tired. I don't know why I'm tired. I slept all day. Didn't have a whole lot to do today, but did go to the beach, some other things today just to get out a little bit and just to get some fresh air. But it's just tough. It's just with right now the way the situation is throughout the whole entire world. It's just hard because so many people are in need and so many people need so many things and you really do try to help and I have a big heart, so I do what I can do. And it's just never enough. There's just so much going on. There's so many people in need, and so many people have problems and things. And sometimes I feel I don't know that I feel guilty. It's just I feel like I should be able to do more, and I think it hurts. When you can't do more. I'm just a giving person. I try, and you know, it's not always appreciated. It's always sometimes it's thrown back in your face. Sometimes it's just not accepted the way that you think it would be. I don't really want a whole lot in return. I always just look at if the person's thankful or whatever, and I see that they're happy and some of that stress came off of their shoulders, then I'm happy too. But you can't hurt me in the process for helping you. So and it just keeps happening, and it's just like, do I how do I stop helping people? Because if you help them, then they're just going to turn on you. So it's just a hard thing. It's just a very, very hard thing. I mean, it's been so much lately, and it's just like now I'm just getting off the messaging with someone who wants food for their children. They've got five children and no food and no milk for their baby, and it's like I've got to think about how to try to help them, and trying to help them, they just their situation is just not in a place where I think I can help at this point in time. But I realize I'm not the only person in the world, I guess, but that's the only way I can kind of get past it. But it hurts. It really hurts when you're trying to help people, but then you can't trust them because I don't really even know this person. So you just can't trust people. I just haven't been able to find a lot of people that I trust. I have a very few close friends, and among us, maybe that's where I need to concentrate my situation. But you know, I don't know. It's tough. So my voice is not as animated tonight. That's pretty much the reason why. So it just hurts. It's just hard. It's just a very hard thing. But one day, and through the building of iLi Academy, through the building of my classes, which of course, with the holidays and things like that, it's just a lot of people canceling things like that. So of course, I have less money, to be able to dole out and help people. It's tough. You want to be able to help everyone, but it's just a hard thing when you can't do that. So it's just difficult. So we'll get through it. We'll be fine. Looking at the Dow Jones today, the Dow Jones was up today, 373 points to 33,527.19. So a wonderful day in the market. But if you look at the chart here, I mean, that pretty much was at the beginning of the day, it just rose close to 300 points. And then from there, kind of drifted along the way. I mean, from about 10 a.m. or so, a little after 10, we were just kind of drifting higher and just drifting off to the right. So it was really a flat day for most of the day. Now, remember, we had holidays too. We had bank holidays in most of Europe, Great Britain as well. So we were pretty much floating on our own here for the U.S. session. So. But we were up 373 points. The S&P 500 was up 58 points to 4,077. The NASDAQ was up 225 points to 13,705. The Russell 2000's up almost 11 points to 2264. We see our VIX ticked up just a tiny bit, about a half a point to 17.91. But overall, a very good day in the market. So what we're going to do, we're going to go through and we'll take a look and see how our trades might be shaping up for going forward here into the week. It is Monday night, so we're going to try to set some direction here between today and tomorrow. We'll be setting direction for where things are going, and it looks like we've got some opportunities here. So looking at this Aussie CAD chart, we can see that we're trading above um, our long-term moving average is 200 and 100, but we're below our 720, right? So immediately we look at our 720, we figure out, are we above it or below it? Are the moving averages above it or below it? And then that's going to determine what our direction is, right? So we know our direction's to the downside here. We can see that the rate is sitting right now pretty much right near our 50 moving average. So the next opportunity to sell would be on our 100 or our 200. We can place an order to sell here right around this 95.71 mark. And there's a lot of room down here to our first kind of area of support, which is going to be here. We'll throw a crosshair on it, which is going to be here right around this 95.45 area. And then down below that, we have some, right around this, we'll call it 95 to, 94.90 to 95 area. That kind of area is where our next kind of level of support would be. So we've got opportunity here. If the rate continues to go to the upside, then we delete the trade eventually, right? But overall, look how far below the 720 the 200 is. It's well below the 720, so just looks like we're not going to be able to, cross the 720 anytime soon. So any short orders here should be profitable for us, even if they kind of go up. Even if the rate kind of goes up, eventually it kind of wants to wind its way back into the overall direction. And so we should be able to get some pips out of it. Aussie yen is trading above our 720. All the moving averages are in order to the upside. So we've got a mature trend going on here. We've just kind of got this moseying along just on a slight trajectory to the upside here that we started to create, especially over yesterday. We did yesterday get a nice drop down here towards the 200. We could have dropped in order to buy on this 100 or on the 50. Either one of those would have been profitable trades for us. We got it again later in the afternoon, a little bit below the 100. So even if we dropped it on the 50 here, an order on the 50, we had two opportunities to really profit yesterday. And then at the beginning of the day today, we dropped again below the 100. I don't know if the spread would have allowed us to trade. It may have allowed us to trade on this 50 again, but we had almost three opportunities. If we could drop that order on that 50, we had another opportunity to be profitable again. So there are three opportunities right here in this Aussie yen. So keep your eye on this one. It may provide us with more opportunities. Aussie New Zealand, you see that we're trading below our 720 here. We've got the 200 here above the 720. So our penchant is to the upside. We know that the long-term direction is still to the upside. The long-term average rate is still above that 720. So we feel like, that's pretty much our direction. But you can see the 200 is coming down here now. It's getting close to my 720. Probably not going to place an order on this 200 to buy. I'm just going to be aware that that 200 is out there and it has not crossed my 720. So it's very possible that the rate will cross back over that 720. And if it does that, then it's a very possible thing that we can buy at that point in time. So I'm a buyer here, but because I'm so close to the 720, I'm not really going to place that order on the Aussie New Zealand. As far as the Aussie US, you see the rate was up above our 720, kind of is finding some resistance there, and now it's trading back below the 720. Our 50, our 100, and our 200 are down here. So depending on how conservative you want to be, you can choose any one of these long-term moving averages for your short. The rate is kind of moving up here, so I would probably go conservative, maybe go to my 100, just because this could actually come down, hit the 50, and then bounce up again. It's kind of close to my 720. It's just an intuition thing. There's nothing about a specific number of pips or anything like that we're going to know, because nobody can predict the market that way. It's just being a little bit conservative, being a little bit safe. Let's place our order maybe down here on the 100. Our overall direction is to the downside. So The 200 and the 100 and the 50 are all still below the 720. So if we're really truly going to the downside, it doesn't really matter if there's a few extra pips in there between. We don't need to get every single pip on every single trade. We have to be smart in the way that we trade as well. We want to be able to say, hey, you know what? I'm gonna, you know, I'm just going to be a little more conservative at this point. It's just a feel that you kind of get. I don't want this coming down here, bouncing off the 50 and then taking off to the upside here. Because we are flirting kind of a little bit with this 720. So we want to be a little smarter. Let's say, okay, let's be a little more conservative. Let's drop down to the next level, which would be my 100 to short. And if we get momentum to the downside, it won't matter anyway, because if that's the direction we're going in, we just need to be a little bit patient and we'll probably get that order and be profitable anyway. So that's how we kind of approach that. Here's our CAD yen on a 30-minute chart. We're trading above our 720 here. There's a lot of real estate between that 720 and that 200. So as we trade down here below our 200, like we did yesterday, we can drop orders on our 50 or on our 100 here, moving averages to buy. And our pension is to the upside, right? So we're in a bit of a range here. That's kind of what I see. This is what I see kind of going on. If I drop in some lines here, kind of in this area, you can see that for the last couple of days, most of the trading has happened in between these two white lines. So that's telling me we're trading off to the right and we're trading in a range. So, we may break out of that range, but just recognize that it does exist there. We kind of have a top here. So if we're going to be buyers, we really want to, be mindful that, we want to be breaking even once we see the rate kind of getting up here around this top of the range, because we want to break even, add some pips to it. So if it does come back down and falls back within the range, we still get a profitable trade out of it. Doesn't matter how many pips. We're not counting pips here. We're just making sure we're profitable and exercising the discipline. If you do the discipline, it's always going to pay you. Yeah, like 90% of the time, it's going to pay you. So, we just have to be smart in the way that we do it. We'll take the pips that it gives us, the market gives us, and we'll roll with that. Right? But we're buyers here. The moving averages will need to kind of get into the order, in order for it to take off really strongly to the upside. But right now we're above our 720. So our any of our trades we'll be placing will be buy stops. Swiss yen is trading above our 720 here. All the moving averages are in order to the upside. We're going to be pulling back here at some point to our 50 and our 100, and that's what we'll have to wait on, is this move to the upside kind of exhaust. Yesterday, we did get that. We had a move down here to the 200 a couple of times. We kind of tested this 200. We could have bought on the 50 or the 100, and either one of those trades would have been profitable. And it's really crazy. Look at how this kind of worked out. Like we hit the 50 or the 100 here. So we would have been in that trade, but even though we came down, tested the 200 again, we had one candle that would have taken care of all of that for us. So we needed just a little bit of patience there. We just need a little bit of patience as we moved off to the upside here. But the momentum definitely was to the upside. If you look at the big candles that we've got here, this is to the upside, right? This big move here, these two nice green candles together, this is all to the upside, right? So a lot of times that momentum that we get bouncing off of those moving averages are going to be pretty strong in the preferred direction, right? So now, looking at this Euro Aussie, we're trading here just below the 720. The ask price actually is just above the 720, while the bid price is below the 720. So it's basically straddling the 720 moving average. You almost can't even see it here. It's right here along this red line. All the moving averages long-term and otherwise are still below the 720. So technically we're sellers here, but we're really close. All of these moving averages are really, really close to my 720. This is something I would leave alone at this point in time. Let's let some separation kind of occur here first before we go and get involved. As far as the Euro CAD goes, we're trading now well below our 720 here. We have all of the moving averages below the 720. We have all of the moving averages are kind of setting up for a move to the upside here, but we're below the 720, so we're still sellers. rates above the long-term moving averages, which is our 200, our 50, and our 100. So we can short on any one of these moving averages. I'd probably pick my 200, where my 200, my 50 are kind of converging right here, which is right around the 1.4784 mark, and short there. It's not really going to hurt us to short there because we are so far below my 720 that, I feel like our direction is really going to be to the downside. It's not at any point in time right now, anytime close, that we're going to have these moving averages jumping over the 720. I mean, there's a lot of real estate here between those two. So that could change throughout the end of the week, but right now I don't see it. So as far as the Euro Swiss goes, we're trading here above our 720. So we got rate just bouncing back above the 720. Here at the end of the day, we were below that 720, but our moving average long term, 200, 150, all of those moving averages were above the 720. So we would have been buyers here. We don't get fooled by this move down here because we know that the overall average has been pointing to the upside here. So we could buy on this 200 or 100. We're a little bit close right now. It's almost like placing a market order. I probably wouldn't do it myself right now, but a little bit earlier as we were trading down here below our 720 or right around the 720, we could have bought on either this 50 or on the 100 or the 200, and we'd be pretty close to a profitable trade right now, or at least getting ready to enter a trade here on the 200 and 100. So, this just kind of proves our theory. And this is, I think, why a lot of traders get fooled, because they're like, wow, it was going one way. We could see it going down. Why did it change and go back the other way? Well, when you know direction, you can kind of figure out, why that occurs. As far as Euro Pound goes, we're trading below our 720 here. We've got a lot of real estate between the 720 and the 200, but all the moving averages are below the 720 as well. So we're going to be sellers here. We're pulling up right now on the 100. The ask price is right now sitting on top of the 100 at 84.99 or so. And as this pulls back, we're going to get a little more distance between that and our 50 moving average. And so we can drop an order to sell at this 84.94 where our 50 moving average is at. If the rate eclipses the 100 by enough pips, maybe by a few pips, maybe get up here near about a quarter or halfway to the 200, then we can take that order from the 50 and improve it to the 100. But it's going to be a sell stop there. As far as the Euro Yen goes, we're trading here above our 720. We've got all the moving averages in order to the upside, and we've got a full mature trend to the upside. So all we're going to be waiting on right now is a pullback to the 100 or the 50 mark, and then we can place our order there. The 150 are kind of close, so if we get down here below this 100, just depends on how far we're deep below the 100, we can place an order there to buy. Now we did yesterday get this order, get rate down here below our 200. So we had the opportunity a couple times where it came down here and tested that 200 to buy on our 100 and our 50 moving averages. And either one of those trades, almost didn't matter where we were at that point in time, any one of them would have been profitable for us. So that's definitely a good thing, right? So we got opportunity. We definitely got real opportunities to trade there that that would have been profitable for us. As far as the Euro Yen goes, you can see our 720 kind of coming across the middle here. Our 200 is still above our 720. So that tells us that we're buyers here. Doesn't matter what else happened here, even though we were moving down here, the overall direction is still to the upside once as that 200 still above the 720. So we still respect that. It's very close to my 720. Doesn't mean that it won't jump over the 720. It might do that. If not, then we expect the rate to jump back over the 720. So we're kind of headed that direction now. So we'll see what happens. So we can't place an order here to short because our long-term moving average is still above the 720 at this time. So let's see here. Let's go to our Euro US. Euro US, you see that we're trading below our 720. So we've got rate below the 720. Got all the moving averages below the 720. Even though they're in order to the upside, basically creating a trend, they're still below they're still below the 720 at this point in time. So we're still sellers here. So I'm a seller on my 50, my 100, or my 200. Right now, I think we're far enough away from our 50 where I could place an order right around this 117.93 mark. So that would be, that would be the first opportunity. We can also trade on the 100 or the 200 if we want to be more conservative as well. So we are trading on this pound Aussie above our 720. We've got our moving averages all kind of like, just kind of, jumping all over one another here, and trading off to the right here. We definitely have a kind of a tight range going on here. Remember, this is pound and Aussie. Both of those economies have been on vacation as well. Yesterday they were on bank holiday, and then of course Friday was a very, very slow day or on vacation for them as well. Not really sure, but so this they're going to be trading off to the right here. Not a whole lot of movement there as those markets were not on board. But tonight we should start to see some movement here, see what happens. We're buyers here at any rate. We're looking for any pullbacks down here below maybe our 100 before we can drop in order to buy. Um, um, going forward. So we're getting a little red candle developing now. We'll see if that jumps down below our 100 enough to place a buy on order on the 100. But with the distance between the 200 and the 720, I don't have any thoughts that they're going to cross each other at any time. So we're going to be buyers here for a little while. As far as the pound CAD, you can see that our 200 has just jumped over our 720. So that kind of changes our direction, right? So that kind of tells us, okay, now we're not looking for sell trades. We're not looking for trade to the downside. We're looking for trades to the upside here. And so we're going to wait for pullbacks to our 100, to our 50 here in blue, our 100 in yellow. As this exhausts, this move to the upside exhausts and pulls back, we're going to see if we get pulled back past our 50, past our 100, enough to drop an order on either one of those levels. And then our 200 coming over and jumping over the 720s, kind of confirming our ability to buy. But it's young, this is a young, mature trend. We've got all the moving averages in order to the upside, but it is a young, mature trend. All right, so let's go ahead and take a look here. See, the pound Swiss is trading above our 720, well above the 720. There's a lot of real estate in between the 720 and the 200. And so we're going to be buyers here. We're waiting on pullbacks, kind of like we got here yesterday. We got a pullback all the way down to the 200. And so that gave us an opportunity to buy yesterday on either the 100 or the 50. Would have given us opportunity. Now, we probably wouldn't have hit those orders just yet because they were so high at that point in time, but we could have been improving our order on this 50 or 100 to the point where we got involved in the trade here. But it still gave us a second opportunity here at the break of the day in order to buy as well on those levels. So we had two opportunities to buy. Right now, the rate is flirting with those levels. So we'll see what happens. From here, we'll see if we continue to on to the upside. Okay, we'll see what happens. Let's go ahead and take a look at this pound yen. Pound yen, we're trading here above our 720. We've got all our moving averages in order to the upside. So we do have a full mature trend here. Don't have a lot of distance between our 50, 21 and our 8. The 100's got a little more distance between it and the 50. But yeah, so we're just we're working, we're going to be working on our pullbacks to the 50 to the 100. Yesterday we got it, right? Yesterday we got a pullback all the way to the 100. So we could have dropped in order to buy on this 50, and that would have been profitable for us. Would have taken us through the rest of the day, but most of the day we would have been profitable, right? Right through the end of the day, we'd have profitable trades. We could have dropped our profit stop loss in there to break even, and we would have been fine. So yeah, so definitely, some opportunity there. We're going to be watching because we're not too far away from our 50, so we can be watching to see what happens as this move, starts to come down here. Let's see if it drops down and gives us another opportunity to buy. As far as the pound US goes, We're trading here above our 720. Now we had our 200 jump over the 720 as well. So that changed our direction to the upside. All the moving averages are in order to the upside as well. And so they're not even jumping over each other. The 8 hasn't jumped over the 21 yet. So we've got a full mature trend here. It's young, so it's just starting. So this is telling us that this may continue on to the upside here. And so we're just waiting on pullback past our 50, past our 100 in order to buy. Right? So good. So I think that's a great opportunity for us if we get it, because the way the moving averages are kind of setting up, they're kind of giving us that distance between each other and trying to run to the upside. So it looks pretty good. Right? I like that type of separation when we start to set up. This is not bad either. This New Zealand CAD here, you can see that we're trading below our 720 here. Our trajectory is definitely to the upside here. We're kind of setting up trend to the upside, but we're below the 720 still. So we're going to be sellers here. We could be sellers on the 50, 100, or the 200. I'd probably conservatively use the 100 right now, because rate right now is sitting right on top of the 50, right around this 88.38 mark. So we don't want to go shorting there because it's going to be close to placing a market order, and that's not really what we want to do. Right. So let's go to our New Zealand Swiss here. You can see the New Zealand Swiss a little different. It's trading rate above our 720. Right. We had rate below the 720 at the break of the day. At the end of the day yesterday, and the break of the day, we had rate below the 720. So we could have bought on our 200, our 100, or our 50. We probably would have been more conservative, used the 100 or the 50, but the 200 here in orange was a little bit close to my 720. Really just depends on how close you want it to be, how close the 720 can be to your 200 before you buy. There's not a set rule or a set number of pips there. It's just really kind of a feel for whichever pair it is, how it kind of trades. And if it just appears to be really, really close, even just visually, then sometimes you just get the feeling like, you know what, I'm not really sure that I want to place the trade here. So you just kind of be intuitive about that right now. So we would be buyers basically on this 100 or this 50. Right now we're pulling below the 50. You see the ask price, which is represented by this red line here, is just below the blue 50. So we're really kind of close. We can't place an order to buy there just yet. But if we continue this move down here towards maybe the 200 or maybe get down about halfway here, we might be able to drop that order on the 50, maybe even on the 100. It just depends on how close we are, how close the bid is. I mean, how close the ask price is to that 100. As far as New Zealand yen goes, we're trading here above our 720. We've got all our moving averages in order to the upside here. And so we're just pulling back, towards the 50 now. We're going to pull back, hopefully a little bit deeper past the 50, and then we can drop an order on the 50 here, maybe even past the 100. So we've got full mature trend to the upside here. So we're going to see how the momentum goes as, these markets get open and as, more traders get on board. Let's see kind of what happens there. As far as the New Zealand dollar, we're coming down right now. We're straddling actually the 50. I mean, the 50. We're straddling the 720 right now. Straddling the 50 is from another strategy, I think. So I think my brain just defaults to that. We're, the rate started out above the 720. Now it's below the 720. It's pushing down towards our 50. We probably wouldn't have shorted on this 50. It's a little bit close to my 720. So we probably would have used the 100 as our point to short. But all of the long-term moving averages are below the 50, are below the 720. And so since we're below the 720, we can short on these long-term moving averages because that's the overall direction. And when we get some momentum in direction, of the trend, then that should be the direction rate goes, right? So, so that's kind of what we're waiting on here. We're waiting on right now. We're a little close to this 50, so I probably wouldn't put it here. I'd probably place my order on this 100 to sell because we're sitting right on top of that 50. But it gave us the opportunity to short on that 50 while it was up here above the 720. So most traders look at that and go, no, right, it's going the other way. It's going up. You can see it all day. It's going up or whatever. But with us, we know what direction is, right? We're not afraid to take the trade based on direction. Now, as far as the US dollar CAD goes, you can see that we're trading below our 720 here. We've got all our moving averages in order to the downside here. We're pulling back now towards our 50. So we're going to wait and see if we actually clip the 50. If we clip the 50 and then we short from there, it would be great. That's going to give us an opportunity to short. If we go past our 100, we'll short there, right? But right now, this is kind of a new trend to the downside here. The 200 just jumping over the 720 yesterday. So, with this nice move down, it kind of gave us that jump of the 720, over the 720, or at least under the 720. And now we're setting up direction to the downside. Kind of exhausted the move, it's pulling back, and that's gonna, eventually exhaust itself too as it decides, okay, this is direction, so let's continue in the direction that everything is flowing in. As far as the US dollar Swiss, we bounced off of our 720. You see that here. We bounced off the 720 a couple times actually. Kind of like breakout bounce, because we created a low, we bounced, we came down, tested the low, really didn't break it, and then we traded off to the upside. It's kind of a breakout bounce trade. But it's in direction of trend, which is kind of cool. So we don't always get that. It is in direction of trend, which is cool. So we're actually breakout bouncing in direction of trend, which is to the upside, because all of our long-term moving averages are above my 720. So this is a lesson to learn for breakout bounce. I'll go through that again. You have a low, you bounce around, kind of this archway you kind of create. You come down here, check this low again. We really didn't break down too far past that low. We really kind of checked it and it held as a support, and then it bounces off to the upside. If it doesn't break that low, it's typically going to bounce off to the upside. And if it's going to be in direction, if the bounce is going to be in direction of the trend, which is all of our moving averages being above our 720, so we know our trend is to the upside. If it's going to bounce to the upside, we know that we're probably going to get momentum to that upside. So that's a trade that we can take as a breakout bounce trade, right? So, and then, as we go, we can buy on this 50, 100, or the 200. We're buyers there, right? So that, that's an opportunity for us. Here's our US dollar yen, which is also above our 720 here. If we look at the rate here, we did create a new low here. Kind of tried to bounce around, but we didn't. We just kind of headed off to the upside here. We'd be buyers on this 50, the 200, or the 100. They're not really in order here, but the next level that we could buy on would be this 200. I wouldn't be afraid to place my order there. It's a little close to the rate. If you want to be a little more conservative, use your 100. 100 sitting up here right around this 110.41 mark. It's just a few pips different, but it might make a difference to you just psychologically. If you feel more comfortable, you can place it there. We don't need every single pip on the board. We don't want to have what they're calling the fear of missing out, FOMO, right? We don't want to have that fear of missing out, because we're going to get a lot of pips. We're always going to gain a lot of pips. We're going to have a number of trades. We don't need every single one because we're desperate traders. We just trade, we go with the flow, and we pick off our pips as we go. In 10 years, we'll still be picking off pips. While the people who are having the fear of missing out, they'll be like, they'll have quit like 8 years ago, because they get frustrated, or maybe even 9 years ago, maybe they last only a year because they're trying to get every single little pip and every single little dime. We don't care about that. We just want to consistently pick up our pips, because in 10 years, we'll still be picking up those pips like a machine. We could do this 10 years from now, it's still going to work. It's not going to be a problem for us. So we don't worry about it. We're going to get our pips. We're going to get everything we're supposed to get. We'll be blessed with everything that we get. So, we don't worry about it. So, yeah, so I do appreciate the time that you've taken here to kind of hang out with us and listen to the show here. If you know anybody who could use this valuable information, can learn valuable strategies like these, let us know. Have them become members of the site. It's basically $1 a day. It's like $30 a month. It's $1 a day. You can come in here and you can learn how you're going to make money. So I just showed you a number of trades that you could have taken even just yesterday and today, and most of the markets weren't even open. So so this is a very viable strategy. It's going to give you more than your $1 back per day. Even if you got $5 a day, even if you made $5 a day, you'd still make 5 times what you're investing. right? So you have to think about it in that way. Yeah, it's $30 a month, but if you utilize the information, you do it the way that it's taught, you're going to get your investment back and then some. And it's not that hard to really to do. So you have to look at it in terms of investment. This is, it's trading, but at the same time, we are investors because we're taking our money, we're paying for a service, but the service is providing us opportunity to make more money with our money. It's not very that difficult. It's really not that difficult. It's an easy thing for us to do. So I appreciate you spending your time here. Once again, this is Derek with iLi Academy. This has been the Trading the Tech Show, and I hope that you have a wonderful day tomorrow and trading and a wonderful evening of trading, a wonderful evening of trading today and tomorrow. Have a great one. Bye-bye.